Hey traders, what's going on? Jamie Saettele here. It is September 29th, 2017, and welcome to Crazy Town. I say that because of Bitcoin and everything else, all the nuttiness going on. But let me know that you can hear me before we get started. Yes, it's Thomas, Chris. All right. Excuse me, I do have a little bit of something of a, I don't know, cold or something. But so bear with me here. But we'll start with the dollar real quickly. I know that's not as interesting as Bitcoin, but it's pretty important for what we're doing. And yeah, so if we start with the analog with DXY, which we're still following, and it's important to keep up on it because it's is it not opening? Why is it not opening? Please open. Hopefully it's not, TradingView is not like overloaded with everyone looking at cryptocurrency charts or something. But come on. Well, all right, it's not loading right now, so I'm not going to waste any more time. But if we were to look at, we can just try to recreate it. Why don't we do that? So if we look at DXY, if we go back to the thing that we've actually, or we went back to the 94. Actually, I'm doing this. You can take note of where I'm going with it. So the 94 period is where we had it, and it was right over here. Yes, it was. And we had, yeah, so we had peaks here. This is what we were looking at. Yeah, okay. So we'll drag that over, and the reason we're looking over this again, it's actually been points where even little multi-day rallies, it's you know, kind of come up with, if you will. All right, so we had the 3 peaks, and here we go. All right. Oh, I didn't. I didn't do it far enough. See, if I could open up the analog page, it wouldn't be such a problem. All right. We'll just start from the top portion. That way we don't have to copy all the way over. All right, so we were like here. Basically, we're like right here, I think. Yeah, we've got Vladimir looking at DAX and copper. DAX is on the list for sure, and we'll look at copper too. But DAX is a really big one, right? I've been writing about it a little bit lately, and even last night, in fact, and I think it's the key market to watch actually right now. Okay, so here we are with this 1994 analog matchup, high day to high day. Okay, and it's been pretty good, right? So here's where I think we are. If we go low day and match it up, either way, right, you get the idea. We've gone into the top, rally, bounce, decline. We bounced now we're 2 days off the low, third day from 1, 2, 3. So we might be somewhere like here, and where we kind of get a dump. What this tells me though is, broadly speaking, dollar's lower, I think, until probably January, through January is the real sharp decline. Okay, so there's room certainly for kind of trading, I guess, both sides, if you will, maybe for the next couple of weeks on the dollar. You know, and that's one reason why I was cool getting out of dollar yen shorts and wanted to wait and let it correct or whatever, which we're doing now. And euro, same thing, right? We've actually come to support there now. So it's just, it's kind of be nimble. I mean, you always want to be nimble, but we're in a period, I think, where it's a broad decline, but it doesn't mean you can't have bounces here and there. So, another sharp drop here maybe into mid-December, and then get another bounce before we might want to position for something more straight line on the downside. At least that's my current thinking on the dollar, and I'm seeing that with a lot of the things with a lot of the currency, various currencies that we're looking at, right? Some actually look like the dollar might do okay. Some look like we should be short the dollar against so and so's currency. Dollar Swiss for one. That's what I like on the downside. But DXY, the channel, pretty good resistance here. If we look at just an intraday chart, right? We've actually been looking at US dollar, but you can see the high 93.40 is also the low from what is that, 10.26 actually. It was during an Asian session 10.25 at 10.26. Good low there. Was also a low here on 11.15. So liking the downside for the dollar, generally right here, okay, probably for a couple more weeks. Looking at US dollar, which is one that we did look at 2 days ago in the update, we had put about 11.980 as resistance. We've danced around that level for the last couple of days, and similar thing, right? High this morning, 11.983. Like it lower from here. So is it going to be mostly euro-based or pound-based, right? This whole dip here is pound. Pound probably looking to extend higher into that close to 35 region before it has any sort of resistance. So if we're not going to get the entry on pound, we might have to reconsider and chase with the tighter stop. So we'll look at that possibility. But yeah, point being, analog suggests this bounce should be sold. And we may have actually rallied enough to go lower in the dollar right here. Okay. Okay. We will look at some of the majors. Then I'm actually going to go with the big cryptos. I said I was going to look at some crypto things like Bitcoin and Litecoin. We'll look at that, and Ethereum. And one of the major reasons to do that is I want to show, which we did look at last week, I think, or 2 weeks ago, the craziness with which the correlations are happening, right? You're seeing Bitcoin basically lead the Nikkei. That's probably not the healthiest thing in the world. Indicates pure speculative activity, certainly at risk of, sharp declines. We're seeing the NASDAQ down, 100 plus points today right now. NASDAQ futures down 1.6%. So these are the types of environments that do create the conditions for really crash type of behavior, right, in markets. And we're seeing that actually this morning in the NASDAQ, wiping out tons of gains from the last couple of weeks. All right, so let's go to Euro first. You know where I'm at here. Posted this morning, was looking for support. We got it. I think that it's higher. Again, I think it's higher for at least 120 and change, and maybe higher, given that this channel would be higher now, unless you're going to get there tomorrow morning. So, yep, I like I like Euro higher. Probably saw a good low this morning to trade against. So when we look at, say, if I go to a 60-minute chart or something, first of all, you would put a line here, right? 1836, which is actually the close from this morning. So that would be the low 4-hour close. It's also the high from 1026. And it's also the hourly close. So we call that hourly reversal support. And if you want to count the waves within the decline here, you've got 1, 2, so it's probably an A, B, 1, 2, 3, 4, 5, C. We'll probably want to leave orders to buy it at 1840, and really I would just target all the way up 120 plus at this point. So I mean, you're talking about an 1840 entry with a stop probably like 18, call it 1810 should be, sorry, it should be enough to take this all the way up to 120 plus. So, you know, I like to kind of wait it out and put the orders in for the day. So, you know, one reason for that too, you know how newsy the current markets are right now, right? All these headlines you're getting, and obviously prone to all kinds of crazy spikes that can take you out if you're plotting orders on an intraday basis. So certainly a good reaction here for Euro, and something we want to see, and most certainly positive on it, okay? But just strategically, tactically, my personal preference is to wait and put those orders in, right? I'm not saying you have to do that, but it's how I like to do things, and you know, I've done better doing that you know, since I've kind of gone to that practice. It didn't used to be like this. You know, I don't know if it's just different intraday activity, okay? It's harder to trust, in my opinion, than it used to be. I don't know if that's because of all the algos and the HFT stuff going on, but it's just the internal, you know, intraday market dynamics seem to have changed a bit. All right, cable I have here just by dips, you know, started to see some headline stuff this morning. You know, you might be wondering, like, I put the order down here to buy it, and, you know, clearly it's probably not going to get hit at this point, but cable's been so newsy and so spiky on all the Brexit stuff that I thought it was worth leaving it in, because you can get such a quick, just 100 pips on the downside and then a total reversal, right? Obviously, we saw that yesterday, but we've seen it a lot. I mean, you've seen all these crazy spike runs, and it's just a good level, you know. You've got the month open and all this around there. It was 618 of yesterday's range. Obviously, that's no longer. If we go to a daily chart here and look at cable, okay. You know, certainly a number of ways to look at this from an Elliott standpoint, as there always are. The key, though, is to try to weed out what's more likely. And you know, if we're looking at this, you know, you could make the argument that this is like an A, or you know, or a 1, and this is A, B, C, and you're finishing a flat here, right? That's certainly a possibility. It's not one that I tend to agree with, however, and here's the reason why. If we look at RSI, just your simple momentum, right, we see that we came from this really big overbought level, and all along the lows, brushing on the lows, RSI was holding this 40 region the whole time, right? That is actually a sign of strength. That is a sign that the drop is corrective, right? Not the rally being corrective. So on a daily basis, this is a positive, right? And it says that really, I think we can continue to trade within this big fork. I mean, look, you could eventually end up towards the top of the upper parallel at some point, which would be up near 145, all right? That's a real possibility here. If we look at the 240-minute, 4 hours, something similar has happened just recently, right? We went overbought here, okay, and since then the dips have found support kind of where you would think they should if you were still in a bull market on this time frame. So in this case, you could say that you actually went bullish, you know, just recently, just after yesterday's dip. A level to know ahead of, or I should say, you know, before the 3280s is this 3345 area, 3346. That is actually yesterday's high volume level. And in cable, you can see that right here, right? Right here, high volume level right here. So if that would be a level to watch. It's the close of the bar from yesterday at 1 o'clock my time, 2 o'clock New York time. So 34.97, which is daily reversal resistance. That could be resistance. And then the next level would be a parallel up close to 35.60, but really focus here should be on buying support, buying dips when or if given the chance to do so. Dollar Swiss. I believe the entry was missed by less than a tick, or less than a pip on this, right? You guys were not triggered. I was not triggered. I had the entry at 98.70, and I had its printing like 98. Oh, Amir says he was triggered. Well, nice, dog. Sweet. Nice work, Amir. Yeah, well, if you were, that's awesome. And you know how much I love this trade idea. I'm not really going to go into this a ton because I spent a lot of time last week on it. But yeah, I think that dollar Swiss could really be on the downside, could really be a big, big play. I don't think there's a lot of people talking about it out there. You know, if we look at the COT stuff, again, I'm not going to go into this week because we spent so much time on it last week. But if we look at the COT on the downside, you know, speculators are, you got to remember the futures are different, but speculators are the most short Swiss they've been in years. So we're looking for, you know, an unwinding of that combined with what we've seen, you know, the price action on the underside of the trend line and et cetera, et cetera. So yeah, I just like the trade. I like the action. I mean, we've responded at the right place. You know, you're getting a nice 4-hour reversal here. You know, so for me, because I wasn't triggered, and I'm assuming others weren't, even though Amir says he was, and I'm sure some were, but different platforms are obviously going to have different prices. The way I'm going to look at this, so you need points of reference, and the point of reference that we'll look at here is going to be the 11:22 10 a.m. bar. So that's going to be right here. So 11:22 10 a.m. bar is right there, right? Give that a nice red line. That's going to be 98.33. And basically we get down below there, probably going to want to short it, or like Euro, you could do a short at 98.56, which is the 4-hour high close. Okay, so we'll most likely, if the day ends like this, we'll most likely end up having orders for dollar Swiss again, but probably at a different spot. Okay. Dollar yen. More or less playing out like kind of suspected it would. We had the gap level over here from whenever that was in mid-September, and that was 1082. We printed a low, I guess, yesterday at 1083, and since then, look at this lower parallel. This is great. I mean, this is really great action. This is a perfect example of kind of what to look at or what to watch for around parallels. So, you know, you had so much support on this on the way down, and then it was real clear resistance a couple times, okay, here and here. You broke through, and then it was support twice during Asia and then during Europe, right? I was close to putting out a tweet last night to say put an order to buy at 11:40, you know, with a 11:05 stop, which actually 11:05 was also a support level we had, and here's why we had that as support. Again, that's the 4-hour low close, right? You're seeing the different tactics here. So the close of the low bar is 111.046. Call it 111.05. That's the low. Guess what the low was? 111.046 on that spike yesterday, right? So yeah, I was close to putting it in an order to buy that, but I'd probably only be looking for 111.90, maybe 112.30 on that. So I wasn't all that excited about going counter trend there just yet. So whatever, didn't do it. I guess it would have worked. But whatever. At this point, I'm looking for a corrective rally to unfold. You know, we could be A, B, and this could be sharp C. Either way, I think the trend line up here is the thing to watch, right? This is the short-term chart. If we go to the longer-term chart, you can see it quite clearly, right? We are into these parallels that have been so useful for really all year long, and we're there now. So if we can get a pop up into 112.30 or so tomorrow, that would be a heck of a way to, you know, put on a short maybe for the last day or on the last day of the month going into September. So you have the trend line and then the parallels here, right? I'd probably be leaving a stop above 112.71. So, you know, call it 112.30 or so on an entry, and just looking for downside continuation. I mean, you know, your next major level is the 10.15 spot, which is the 618 of the entire advance from September, right? So that's an area to pay attention to. But the other area that I really thought we should pay attention to is this trend line. And this is January and May. You can see there was a lot of trade around it, right? We had some resistance here for a day, some support here for a day, really good resistance for like 4 days in July on the way down. And then really it was kind of the breakout trigger, and then you had a gap that the one we just, well, I guess we didn't fill it, we missed it by a pip. So, you know, I'd be looking at resistance up here, 12.30, and oh, Amir goes, my order was unchanged, that's why. Yeah, well, whatever. Sometimes it works out that way. Yeah, so I'd be looking at taking this down towards this trend line, which would be all the way down towards you know, I mean, you could get a retest of the lows down here. Okie dokie. Let's look at Aussie, Kiwi, and dollar CAD, and then we're going to go crypto weirdo stuff. Aussie dollar, don't want to spend a lot of time on it. I think that if we're going to make a low, my best bet is that it's on this trend line down here. Aussie hasn't been trading all that great lately. Haven't looked at it because it just hasn't been all that clean, to be quite honest with you, right? You've had much cleaner price action in Kiwi. One thing I will say is that you get divergences at turns, oftentimes between the Australian dollar and the New Zealand dollar. So if we are trying to turn, then, you know, what I would look for is support on this trend line, but you'd probably have Kiwi not confirming the low, right? You'd probably have Kiwi making a higher low, and hopefully we can just continue on our merry way here in the New Zealand dollar down into the 68 40s or so, and get out at 68.50, and then just buy it for you know, buy it for a bigger run, right? Real clean 5 waves up. Australian dollar has 5 waves up as well, but it's, again, it's just real choppy, and it's not as clean. The range is smaller. It's just acting like crap. You know, it's not trading well. So again, 1, 2, 3, 4, 5. Looking for 3 down, support down here somewhere, and then look to take it higher. And we are starting to see quite a meltdown over here in the tech space. You've got goo. Look at that. Netflix down 5%, Facebook 4, Tesla 4, Amazon almost 4, Apple almost 3, 2.5. Getting ugly. Anyway, all right, so moving on. Canadian dollar. We have taken out this level, but we're not really holding the underside of this trend line either. So we may end up getting what we kind of were initially looking for a long time ago, which was hold on. Sorry, I'm trying to figure this crap out here. Which was the here it is. Which was really the push into 29.70, basically, right? That's the 2 legs up thing. You've got the low from January 31st, 29.67, and you've got the 200-day average there. So that might be where we're going. You're finishing, you know, this month here virtually unchanged. You've got a doji going on here on the month, because you open the month right here, 2086. Seasonals on CAD are not that great. For dollar CAD is actually quite bullish towards the end of the year, but the level's so huge. Just know that if we do get up to this level, I'd be looking for the next top. That's all. Okay. We'll see it when we see it. And that'll take us to crude oil real quickly. You know, with crude, we may very well have a new so-called bullish slope. You know, many were wondering if we were going to take out the highs from May 2015. I don't know. You know, we're trading on the median line. You know what I just said about the Australian dollar and New Zealand dollar, right? With their divergences, you get the same thing with crude oil, WTI, and Brent oil. Okay, so here's WTI. Now, keep in mind where these lows are, and keep in mind that this high is above this high over here from November, right? Well, if I put up Brent oil, guess what? Remember with the low in WTI in February, we were making a higher one, and you've actually had Brent has been the leader, right? Brent has been the leader. So Brent was the leader, but look what happened on this latest one. Brent did not confirm. So that tells me that there's actually risk of a pullback here. And you have a very clean slope going on with UK oil or Brent oil, whatever you want to call it in particular. And it may be where we get ourselves a nice little retest of this neckline, right? That would be a heck of a drop, but you know, again, the speculative, the positioning is uber long right now, right? Oil traders are extraordinarily long, and this would be a hell of a level to retest. Have the 200-day average down there too. So I don't think it's out of the question to get a move down into that region before you go higher. Okay. All right. Now we'll look at some crypto stuff. All right. So Bitcoin, out of this world, right? Well, check this out. You've got, if you take the 2013 high to the 2015 low and you do all your fib extensions on it, so 161.8, 261.8, 423.6, 685.4, 11.088, and if you're wondering where these are coming from, these numbers, I will show you. Okay. So if we have our fib sequence, right? All right. So here's our fib sequence. Divide this number. You don't know if you can go. We'll start over here because we'll go all the way out. Okay. 1618 is number divided by the one in front of it. 2618 is 2 in front of it, right? Go 3 in front of it, and you get 4.236. 4 in front of it, 685. 4. 1, 2, 3, 4, 5 in front of it, 1109. That's where that came from, the one that we just hit. And 5 in front of it, you get 17.94. That's how you get your fib extensions, okay, rather than retracements. So this is the one we just hit. Okay, now I have the channel a little higher, right? I've got the 12,000. Maybe it's stupid to even like try to call a level here, but you get what I'm saying. So big spot up here, and yeah, I just wanted to let you know that whatever Bitcoin is coming up on this huge level or has essentially hit this huge level. If we look at Ethereum, it's actually a very clean technical pattern on Ethereum. You have a big old channel, and you can see that this is a textbook triangle, A, B, C, D, E, right? And then you have the breakout, you have the median line here. I would be, if you do get some sort of a pullback or what have you, I'd be looking for support really around the median line, former highs at 405, and for continuation up towards the parallels, which would be all the way up at 1279 and eventually even 1987, which are the fib extensions which intersect with the parallels. Okay, so maybe that's the next one to pay attention to. Litecoin, I'm not sure which one I have. I don't think I have anything really plotted for it, actually. Do I? No, I don't. Go to a weekly chart on this one. Litecoin, though, it looks like we can draw a channel on this one. And you'd be getting up into the top of the channel already. So might want to pay attention there. So watch out for Litecoin. If Litecoin trades up towards, I'd say 134, I would actually be willing to say that that's resistance in this cryptocurrency. And you can see actually with Litecoin, you've also got the extensions that are doing pretty good stuff. Like here's the 423.61 was resistance, then it was actually support. 685.4 was resistance. Next one would be 150. All right, so maybe 150 is more the level to pay attention to. Okay, so those are the three I'm going to look at. I'm not going to look at any of the other ones. I'm not familiar with any of the other ones. I know there are other ones, but I'm just not familiar with them, and don't want to do it just yet. Looking though at so this is the Nikkei, and I mean this can't be healthy, right? I'm plotting Bitcoin in blue with the Nikkei. So I did read somewhere that the Japanese or Bitcoin trading in yen is actually the largest of any currency, partly because it's Bitcoin trading was outlawed in China, so the Chinese apparently found ways or go over and do it in Japan, do it through yen. So whatever, right? And don't forget to, it came from apparently Japan, right? Satoshi. In fact, Bitcoin, a Satoshi is actually the smallest increment in Bitcoin. Okay, a Satoshi I think is 1/1,000,000th of a Bitcoin. It's called a Satoshi. It's like our penny or something. So that's a little bit of trivia for you. But look what's happened recently, and we talked about this 2 weeks ago, but Bitcoin is leading, or seemed to be leading, the Nikkei, right? Top, top, bottom, bottom, and then Bitcoin went on its latest insane rampage, while the Nikkei didn't really do that. It kind of went up sideways. We just popped higher. We may have just actually completed a triangle thrust, an A, B, C, even though the C is really small. That's still a possibility. You're putting in a hell of a 4-hour reversal right here. And, again, is this a previously related market? What if this is a big divergence? What if Bitcoin just kind of blew its load up here and is topping out, it's topping out up at this massive price region, and that they're both going to go down together. I don't think that's a crazy story to tell. I don't think it's that hard to imagine. They went up together in speculative excess. They come down together in what could only be seen as complete chaos on the downside. So I don't think that is a crazy thing, to envision, right? So yeah, that's I think that this is actually the most interesting way to look at Bitcoin, is the fact that you've had these moves with certain indices, notably the Nikkei out of Japan. All right, the DAX, to me, the cleanest index, most important one to follow. We said yesterday that we wanted to see resistance here after this drop. Maybe we don't get it, right? We wanted to see right here, 13,270, and was thinking that once that happened, the euro would be free to absolutely go upside big time against the dollar. Certainly, there's room for interpretation to get there. Like this could be an A, and you could be triangle everything from here. But the bottom line for me is that 5 waves down say that the broader trend has changed, at least for another leg lower. Okay, and that's important. We don't want to get lost in the short-term charts and lose what we're the bigger picture, which is I think a bigger top as per this chart that goes all the way back, to 2003. And to me, looking down towards 12,100, which is a 7% drop, it's not a ton in the grand scheme of things, but for most market participants that are probably used to just markets that go straight up, I think it probably would be a frightening experience. So Mahai says, if you had to short DAX after today's drop, where would you try to short it? Well, let's see. That's a good question. Let's go to the daily and see where the hold on, sorry. 15-minute. If you get a little 5 down here, I'd watch for resistance at 13,100. So we're at 13,060. So you might want to try 13,100, and that's why you've got those right here, right? 13,100, 13,100. So you've got some support there, resistance within the range. It's just a, it's a well-defined spot. So that's where I'd look. Don't forget too that long euro would kind of be a similar bet, if you will, right? Well, stop would just be up here, right? 13.2. So that was DAX. I think the most important one to watch. Take a look at copper. I think copper is probably done for a while. Right. I mean, you can count 5 waves up all over the place. So you got 1, 2, 3, 4, 5. So we should be getting a pullback all the way towards, probably something back towards this median line. So if we want to go intraday on this, and give it maybe a potential for shorts or something. I would watch here if you get a pull. If you get a, first of all, this would be your. There's a couple ways to go to look at this. If you consolidate here and you get a bounce, watch for resistance right here. Okay. If you come down here, right? If you come down to this level and bounce, but then eventually break it, then you're looking for resistance right here, right? So essentially you have a working downsloping channel. It doesn't have a ton of action on it at this point, but it's good enough, I think, to it at least warrants some attention, to pay attention to it to see if you can get some action on it. Asking about the S&P, and is it an important reversal? I mean, the S&P is like down 4 points right now, so It's, again, I think the DAX is the one to watch. The Nikkei is the one to watch. This is the NASDAQ, which appears to have an important reversal, right? This is the original slope in the NASDAQ from February 2016, and we just went not quite into it. So I was actually thinking the top would be 250 or 157 on QQQ, and so far it's 156.69. So not quite there. But watch for support at 152.35 and see if you can form a top. I mean, trying to call a top has obviously been impossible. And it's not so much about calling tops as it is about the tactics of the trade, right? And looking for the proper reward to risk ratios. S&P 500, actually we did hit a level. What did we have? 26.35. I mean, for me, the trade's on the short side, but like shorting's been so freaking impossible. So, that's all I'll say. For me, the trade is on the short side. Obviously, this is going to look quite different than the NASDAQ right now. 1, 2, 3, some sort of an ugly triangle, 4, blow off 5. Certainly possible. Let's get rid of that. So, I mean, look where we topped. This is a slope. That's the top from here, from May of 2013, and that so far is where, and that was all support, so that's where we've actually, and today's high is literally a point from it. So there is a level there. Whether or not today is the top, I have no idea, right? It's certainly a level that you want to be shorting into, in my opinion. I don't know if today, though, is the top, so to speak, right? There are, there's other stuff out there too that like looks really interesting to short, like China. This is FXI. Again, I was looking one more, maybe 49.20 on this, but what you've got here at this point now is this is a failed breakout on this daily chart. So like today's action actually brings you back within the breakout level. So this China could be on the downside here, which is another reason why, like the Australian dollar, I'm not all that keen on it right here. Of course, China's been ripping face, so is copper, but the Australian dollar hasn't cared all year, so maybe that doesn't matter anymore. I don't know. But there are things out there that look like they have some cracks in them. Okay, there's a couple more crosses I wanted to look at real quickly, and then I got to wrap it up. But Euro Aussie is one. Okay, so you had this huge breakout. Hold on, I did a chart on this last night. Maybe it was on a different feed. Okay, here it is. So Euro Aussie, arithmetic chart here, but we got some really big stuff right here. So you've got the trend line 2012, 2015, and this is a real deal breakout. So, but we have stopped here. So point being, if you continue higher through here, and get through all the big horizontal levels, right? Get through all the big horizontal levels that, you know, up to all the way up to 58.30. I mean, Aussie could really, Euro Aussie could really continue to go, and probably speaks a lot to the more the Aussie, maybe Aussie weakness, right? Relative, well, obviously relative to Euro, but I'd be looking at, I mean, you could be going as high as back to 162.26, right? There is this fork to follow. It's just the channel, you know, very well defined. You're trading right on the median line right here. So this is a pretty powerful structure. And, you know, we have the possibility, of course, around here of getting some median line acceleration, in which, again, upside, you go through it, and then you're going to zoom much higher. So if we do that, you could be talking about the upper parallel, which, you know, could be back near the crash, China crash highs of from August 2015. So it's just a good structure to follow. You know, if you do pull back within this, I would watch for support, maybe on the 25 line here. Okay, so just something to be aware of. It's a good chart. Euro pound does not look very healthy, to say the least. You have, here's the trend line, and big reversal yesterday following through today. 200-day average is right below. If you crack this level, basically 87.40, you're cracking, you know, essentially you're talking about down, sideways, and the next leg, right? So you'd have really solid downside in euro pound. I don't know what this says. Maybe it says the pound is just better on the long side than euro. Okay, I mean, you know, that might be it. We don't want to make it too complicated, but euro pound, interesting. Maybe for a breakdown scenario as a short. Okay, and probably want to take it down to 84.70, which would be 2 legs down. You have this weekly slope, also 2015 lows, a parallel off this high from April 2016, nails this low. That would also be around where you'd be looking for the target, right? Which is, again, just above 84. Okay. And then, of course, there's Euro Swiss. Amir's asking Euro CAD. I will definitely give it. But, you know, Euro Swiss, I just think that, to me, this looks very toppy. You've got all the divergence, the reversal activity, the level. I like it on the downside. Euro Swiss from here. Not as, I'd rather trade, you know, dollar Swiss. I'd rather trade both euro dollar and dollar Swiss for that matter. So I'm not trying to short Euro Swiss, but it's just, you know, I think the dollar Swiss is probably one of the reasons I think the dollar Swiss could outperform. That's all. Okay. And Euro CAD. Let's look at Euro CAD. I haven't looked at Euro CAD in a while. Okay, so breakout. Whoa, that's a head and shoulders if I've ever seen one. not the cleanest of stuff, but this is a big base. I mean, this looks like, I don't know if this means commodity currencies like, Canadian dollar is about to get smoked, but yeah, that's a hell of a base. Let's see if we have a better slope from the February low, channel-wise. So I think this is the one to watch, right? Yeah, I would just watch this one just in particular. I wouldn't even mess with the other one. So if you're looking at this channel, it's just like Euro Aussie actually, from the standpoint that you're testing a median line, very well defined on the center channel, right? Resistance back here on October 26th, pullback found support right on the 25 line, right, which was resistance before that. So I'd be looking for upside acceleration because you're coming from the 25 line from support. You're looking towards the 75 line, excuse me, and that puts you upwards of, probably up in the mid 156s is where that takes you. And this, of course, could be the beginning of a much larger breakout. But yeah, I'd be looking towards that region. So yeah, what we're seeing in the crosses, a bit mixed, Euro pound potential breakdown looming. Euro CAD and Euro Aussie look like they're about to, they're in position where they could accelerate to the upside, and maybe that means that pound's going to be your big one, and commodity currencies like Aussie and CAD are going to be relatively weak moving forward. So yeah, all right. Hope that helps. Hope you enjoyed the webinar. Everyone, thank you so much for your time. As always appreciated. And I'm going to get this up and archived as soon as possible. And good luck, and have a great rest of your week. Okay? All right, we'll talk to you guys later. Take care.